Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Let's take a look again on euro currency. So on the daily chart we don't have the big changes. Actually market stands for the second session inside of the Monday candle when this drop has happened. So this was Tuesday session, and now it's Wednesday. Today we probably hardly will get any significant action before the Fed statement. It's probably everybody across the board will wait what Jay Powell will say about the perspective of the United States economy. Somehow, based on the statistics that we see right now on the market and performance of the financial markets, somehow something tells me that everything will be good. I mean, for the United States, my personal opinion that I am not the prophecy, of course, but based on this information that we have and that we have discussed now, weekly reports, there's probably hardly should be some kind of dovish statement. So maybe it will be natural with the supporting of the same direction of the Fed policy, but personally I did not expect to hear some real dovish comments. But guys, actually, to be honest, I did not trade the fundamental events, release some statistics or Fed statements. That's just the observation, some thoughts on this subject. So, and I, of course, I did not call you to take the position based on my thoughts. So, what on the intraday charts, we have the patterns that we have discussed partially yesterday, but today we have a bit more information. So, if we'll take a look at the follow time frame chart, take a look. We've got two grabbers here. First, right spike right at the top. Second one is right here, has been formed recently, and both of them suggest a drop below these lows. So this kind of the breakout should happen. As you know, we mostly expect minimum retracement somewhere to 116 area, circumference support, and we think that the 30% retracement is reaction on the strong daily resistance. It's normal. So it's not the big collapse actually, it's just minor bounce. When the market and if market will appear in this area later, we will see what to expect next. Maybe it will be 50% retracement as we suggested, based on the possible reverse head and shoulders pattern on the daily. But currently, we're watching for classical and conservative target. It's just a 30% drop. So that's two moments that we have. Also, if you put the MACD indicator here, you'll see also the divergence between these tops. And this divergence has appeared right at the major daily resistance. So that's why here let's see, interesting. It's the hippie sign here is forming with the MACD predictor line and the circle. So on the hourly chart, we have our setup yesterday that we have discussed yesterday. It's regardless steeple to sell. You could see the setup in general has worked very nice. And here we see kind of the harmony between the price action. This is of course not the pattern. I just put here these triangles to show you the harmony. It's the mirror harmony to what we have here. On the hourly chart, in this part of the picture, we also have the bearish grabber has been formed, so also just drop below. And this harmony provides us another pattern that we could watch for. This is a hand and shoulders, guys. It's left shoulder, hand. This could become right shoulder. And the pairing of this pattern is very useful by two reasons. First of all, you do know where the target is. So you can see this first action will be some kind of the A, B, C top. Some targets, either AB equals CD or 1618 extension, right, somewhere in this area. But also this pattern is important from the resistance point of view. So if market will move above the 118, again, on the fundamental background, everything could happen, especially in the Fed comments. So if market will break this area up, in this case, maybe the market could proceed higher immediately based on some information that we will get from the Fed. It's also possible. And from that standpoint, the hand shoulder is very useful because the failure of the market to hold below the top of the shoulder and it's moving above it tell you definitely that pattern has failed, and it will mean simultaneously the market should proceed high above the head. Potentially, we could recognize the possible butterfly here. For example, it's left wing, right? And this could become the right wing. Market will start upward action. But why we do not take it into consideration right now? Because from the technical point of view, guys, we do not speak about the fundamental. Fundamentally, it's possible. But from the technical point of view, guys, we stand at the strong resistance area. And any pullback hasn't happened yet. It's minimal retracement hasn't done yet. That's why we're mostly watching for patterns that could trigger the downward action. So if you have followed our advice and taken short position here, now it's time to move your stop to the break-even. Because although we have the bearish continuation pattern, regardless cheap should sell, we do not have another confirmation. Take a look, the market hasn't broken yet through the trend line. We also said that this will be important indicator. So when the market will break the long-term trend line here, because for hourly chart it's really long-term. That will be a very important sign that we are right and maybe indeed downward action is developing. So while market holds here, it's still 50-50. So yes, entry was not bad, market dropped, but still it stands above the trend line. So what I would like to say is that if you have taken the short here, you could keep it, just move your stops to the break-even and be prepared for the Fed. If you have missed entry here, currently it's not very good moment to take the short. One thing that you could do is just to stick with the grabbers, either here or on 4-hour time frame chart. Use these grabbers as the triggering pattern with the stop slightly above it. But this is a bit weaker scenario, weaker context for taking the short position. Or you could wait for a breakout here down and trying to take short position based on minor retracement if downward action could start to develop. So that's what we see right now on euro currency. The bearish context will be vanished and destroyed if market first will move above the 118 and if it will move above the 1825. When it erases this construction total and starts upward action, well, it could mean that indeed market is turning higher. At least the butterfly target here will be reached. So it's approximately will be, if this construction will fail, so it will be 127, it's approximately 118.35, 1618 is 118.60. So 118.60 could be hit because a lot of stops, guys, have been placed here. So now you have the trading plan. So if market will exceed here, this area, start to move higher, it will mean that it's coming to 1860. If everything is good, market drop below this trend line, it means that our scenario is valid and we are watching for a deep reaction on euro currency.